Mortgage rates are through the roof and got as high as 7.5% last week. That's the highest we've seen all year. The one silver lining of these high rates is that new listings data is growing as well as total active inventory. So at least these high rates are actually doing what they were intended to do, which is slow down sales, which increases days on market and gives inventory time to stack up. And if we don't want to see a repeat of the 21 and 22 market where everything was multiple offers, we still need inventory to literally double from here before we see a significant drop in rates. Otherwise, there's just going to be too much demand. So it's not all bad news with high rates. The National Association of Realtors report for last month just came out, and we saw a big drop in existing home sales, yet the average sales price saw an increase. How can this be? Shouldn't less sales happening and inventory increasing keep prices from going up? We're covering all this and much more in today's weekly update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is April 22nd. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to see the latest weekly market update. First up is market news. Mr. Fed himself, Jerome Powell, came out last week and made some statements at the Washington Forum, just confirming what we've already been saying here the whole time. Until the labor market breaks, there will be no rate cuts, regardless of what inflation gets to. I'm going to read you one of his quotes. He said, "Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and evolving outlook guide us." Then he also said, "The labor market remains very strong. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than half a century, the longest streak of its kind." In other words, they think too many people have too many jobs, making and spending too much money, and this will continue to cause inflation. That's their thinking. So the Fed believes that by attacking the labor supply with high rates, companies will eventually have to lay people off, which means Americans will make less money, which will force them to spend less money, ultimately cooling off inflation. So what we need to continue watching for the Fed to pivot is the number of jobless claims. So you can see, looking at the chart, we actually had jobless claims go down again, and we're down to just 214,000. For the labor market to be breaking, this number would need to be over 300,000, which even back here, it didn't get anywhere near 300. So as you can see on this chart, not only are jobless claims way too low to start cutting rates, they're not even starting to rise. They're actually headed in the wrong direction if we want to see rate cuts. We need this, exactly what happened here. We need that happening in the opposite direction. We need this going up. So if you've heard me every week and you haven't believed me so far, now you heard it from Jerome himself. The Fed is really looking at the labor market over inflation. Now the next half of this week's news segment, the National Association of Realtors March report just came out, and here's what we saw. The actual number of existing home sales had a sharp drop, that's this top left chart, of 4.3% last month, of 190,000 less homes sold. And this is almost exactly what we saw last year, where we had this huge jump at the beginning because rates were dropping at the very beginning of the year. You can see it right here. From here to here, that's when rates went way down. But what happened next is rates climbed the rest of the year and sales got slower and slower. We saw the exact same thing this year. Rates went from 8% all the way down to 6.6%. We saw a big jump, and now as rates are climbing, we're back up around 7.4, 7.5. We're going to see less and less sales until that comes down, if last year repeats. And I wouldn't be surprised if we saw something very similar to last year. So the number of home sales is decreasing, yet the median sales price, look at this, is headed straight up. It increased about $10,000 from last month. How can sales be slowing? And if you look, inventory is climbing. How can that be happening and sales price is still climbing as well? So what I'm personally seeing here in the resale market is there are basically two totally separate markets. There are the homes that are either way overpriced, or they just need too much work for the average home buyer to even consider. That's one half of the market, and that's where we're actually seeing a lot of the inventory coming from. Then there's the other half of the market, which is just if a nice move-in ready home comes onto the market in the Dallas-Fort Worth area and is priced appropriately, it is going to be seeing multiple offers. And I mean literally every single home that I'm offering on that meets those criteria of just being a nice house at a decent price. I'm not exaggerating, 100% of them are going multiple offers within the first few days. So it may be a little confusing to see inventory climbing and sales slowing, yet prices going up. But I think it's because every single home that's actually selling, that someone actually wants to buy, is going multiple offers, and the ones that they don't are just going to continue sitting. So that's why it's not in the sales data. They're sitting on the market, inventory's going up, but until they sell, we don't know what price they sell at. So they're not going to impact the sales data. So the only homes impacting the sales data are the ones actually selling, which are the ones that are going for multiple offers. So I don't have a way in the data to show you this, but there really are two different markets within the existing home sales market. But it's like overall inventory is increasing, but actual good inventory is still at all-time lows. That's why prices keep climbing. Okay, some other things we saw in this report. First-time home buyers in March, and these are 1 year apart from 23 to 24. We saw a 4% increase in the number of first-time home buyers buying homes. Individual investors had a decline from 17% down to 15%. All cash sales went up 1% from 27 to 28. Distressed sales went up 1% from 1 to 2, so no real change there. And then days on market is up from last year from 29 to 33, and this is something that's good. We need this to go up to help inventory stack up. So that's all we got in that report. Now let's move on to national housing inventory. This week we had an increase of 16,582 homes for sale in the U.S., which gets us up to 543,044 homes for sale in the country. I believe this is the biggest weekly increase we've seen in years. This is good news. We're seeing a good increase in inventory. And for reference, the all-time inventory bottom was in 2022. We only had 240,000 homes for sale in the country. And the peak of last year, we had 570,000 homes for sale. And then this same week in 2015, we actually had 1,060,000 homes for sale in the country. So we're up double from the 2022 bottom, but we still need to double again to get back to a normal market. Okay, now let's look at new listings. Some more good news. For the first week, this week's new listings are significantly above the same week the previous 2 years. In fact, we're about 9,000 more homes listed this week than either of these two previous years. Now, obviously, it's a bit of an anomaly as 2022 had a big drop that week, but we'll take any good news we can get. Obviously, 1 week data is not a trend, but at least we've been trending along with 2022, which is way better than the bottom red line, which was 2023. We had horrible numbers last year. So we're already trending back to 2022, and for the first time, we could be at the start of trending quite a bit above 2022, which is what we really need. And it's crazy that we're seeing so many listings now, because if you look at the 2023 data down here, the terrible line, when rates were going through the roof, people were like, forget it, I'm not going to list my home and buy at these crazy rates. This year, rates are higher even than they were last year at this time, and more people are listing every week. So this shows you people are just getting used to the market. They're not going to sit on the sidelines anymore. And this is good news. So remember, to get out of the housing shortage, we need both higher days on market and more people listing their homes. And for the first time, it's kind of looking like we're starting to get both. If the only thing that happens this year is that we can get active inventory to double from where it is now, that would be a huge win. The last thing we cover nationally is the percentage of homes having a price drop. Every year it's normal for a third of homes to have a price drop before they actually sell. Looking at the national chart this week, we're at 32% of homes having a price drop. That's down a tiny bit from last week. It was 32.1. So no big deal, not a significant drop. It's just 1 week. And last year we got as high as 39.2% of homes, and the year before as high as 43.2. This is a normal number to start increasing this time of the year. And it's a good thing, because if the number of homes having a price decrease are going up, then it means probably the days on market are going up, and that's something that we need if we want more inventory. So all we're looking for here for the rest of the year is just any aggressive swings in either direction, and that's going to be totally dictated by mortgage rates. But don't be surprised, this number should be climbing all the rest of the year until probably November. Okay, now we're moving on to mortgage rates. We started the week off at a 7.44. We got as high as a 7.5 and ended back at a 7.44. And if we just jump over to look at the 10-year, what do we think is going to happen today? Well, we can see mortgage rates tried to have a big jump this morning. So far, it's being rejected, and we're coming back we're about exactly where we closed on Friday at that 7.44. So I would expect no real change in rates today unless we see a big swing in this number between now and I think it's about 3 or 4 o'clock when the numbers come out. Now we do have a big inflation report coming out. I believe it's this Friday. So we may see a slow week and then we may see something explosive happen on Friday when we get that report. Now regarding mortgage purchase applications, and this one was very unexpected. Even with mortgage rates climbing up as high as 7.5% this week, we actually saw a 5% increase in the number of people applying for mortgages. So basically, last week we saw a 5% decrease, and this week we jumped right back up and had a 5% increase. So it's as if last week never happened. We're right to where we were 2 weeks ago. So even higher rates are not slowing down demand the way that they once did. But this also has to do with seasonality. We're coming into the spring market. There should be a lot more buyers just seasonally who are going to be trying to move between now and before the school year starts. Okay, before we move on to the local market data, 3 things. The first thing is I am going on vacation, so it's likely I'm not going to do a market update next week. So don't be surprised if nothing pops up next week. Number 2, last week I just released a new construction home buying course. So I've been doing the online webinar that's more been geared towards resale homes. But I've been selling a ton of new construction, so I wanted to make a similar course, and instead of a webinar, it's just a course. So it has easy modules to follow, and it's free as well, but I think it's a little bit of an easier format. So let me know if you prefer either a webinar or the courses, but that's available to you now. So both the new construction course and the home buying webinar where you can just watch a replay, both of those links will be in the description below. It's going to cover everything you need to know about the home buying process, and they are very different if you're looking at resale versus new construction. So make sure you pick the one that best suits you. So those links are in the description. And then last but not least, I've developed a max affordability calculator, which will very quickly and easily get you into the ballpark of how much home you can actually afford based on your personal financial situation. It will give you several options to choose from, and it takes into account everything all the way down to your tax bracket. It is free to you, so take advantage of it. And if you want to learn more about that, you can watch this video next. Otherwise, the link is in the description. Okay, let's move on to the local market data, starting with the MLS data for Collin County. This week we had 593 new listings. That's 35 more than last week. 348 closings. That's 51 more than last week. Of the homes that closed, 105 were immediate sales, meaning they contracted within the first week. That's 9 more than the previous week. 367 went under contract. That's 89 less than last week. In total, there are 2,653 homes either under contract or in pending status. That's 36 more than last week. Now moving on to Collin County, 463 new listings, that's 23 more than last week. 280 closings, that's 47 more than last week. 93 immediate sales, 7 more than last week. 246 went under contract, 21 less than last week. So we saw less contracts in both Dallas and Collin County. Of course, I believe that's 100% because rates were going through the roof. In total, there are 2,008 homes either under contract or in pending status. That's 5 more than last week. Okay, normally we would be looking at the market action index, but as you can see here, the last time it was updated is April 12th, so it did not update this week. I'm going to message them and say, what's the deal? But we're skipping that this week. However, what did still update was the top 10 ranked charts. Now, there was almost no change, so I'm not sure that the data is 100% accurate, but we'll just go through it quickly here. The absolute hottest city remained Louisville, then Grapevine, Coppell, Carrollton, Plano, and Ferris. They all held their spots, maybe. The only changes were Lancaster and Richardson switched spots. So Richardson dropped 2, Lancaster increased 2, and then Sachse remained at number 8, and on number 10, Garland jumped onto the list, replacing Allen. Then looking at the absolute hottest zip codes, number 1 is Louisville, 75067 at a 68.72, followed by Dallas, 75287, Carrollton, 75010, Garland, 75042, Louisville 75077, Irving 75063, Plano 75075, Frisco 75035, Plano 75025, and Grapevine 76051. And then moving on to the coolest markets, we literally saw no change. So it just went Van Alstyne is the absolute coolest, and it remained a buyer's market. It's been a buyer's market for a while, and then followed by Nevada, Lavon, Blue Ridge, Prosper, Leonard, Rockwall, Farmersville, Salina, and Red Oak is the hottest city on the coolest cities list. Looking at the zip codes, the absolute coolest, there are actually 2 that are buyer's market. That's Van Alstyne 75495, Dallas 75204, and then we get out to seller's markets, but just barely. Anything a 30 or above is a seller's market. So the third coolest is Dallas 75235, then Nevada 75173, Dallas 75203, Lavon 75166, Dallas 75205, Blue Ridge 75424, Irving 75038, and Dallas 75219. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching, and I'll see you in the next video, which again will be in 2 weeks because I'll be on vacation next week.